Thank you again for joining us, everybody. I am Nicole Klein with the Marketing Alliance, and we are really, really pleased to bring you this panel of experts today to help your agency navigate the new now. Our moderator is our wonderful friend Greg Olson with Growl Agency. Those of you who have been with the Marketing Alliance, formerly the Business Marketing Association, do know Greg. He's I think, were you a former president, Greg?
I was a former president, yes.
Yep, former president. And in 2017 at our 14ers Award, we gave Greg the 2017 Marketer of the Year. So we are very proud and privileged. So I will hand this over to Greg.
Thank you, Nicole, for having us all. And again, the Marketing Alliance, another wonderful organization, and we'll make sure everybody who is on, I've had even people reach out that I haven't talked to in a while, so hello to everybody. So let's go around and talk about who we have on this virtual panel. We're going to be talking about some really, I think, important items as we go through these kind of uncertain times. And we're really talking about adapting to this new economy, whether you're a consultant, a business owner, a business leader, an employee. These are all going to be very important topics because it affects you in some way or in fashion. So we have John Ty with us from Mountain View Bank of Commerce. Thank you, John, for being involved from a banking aspect. I know we were getting caught up, and it sounds like you've been working, filling out a few applications and helping people with various SBA loans. We have Kelly Johnston. We have two Kellys, so it's going to be Kelly J and Kelly M. And so we have Kelly Johnston, and she's JFS Consulting. Has a great accounting, bookkeeping firm, very financial expert. So we'll be really looking forward to have what she has to say. And then Kelly Murphy, everything about human resources and more. All those questions that we're afraid to ask, we can ask today. And she does a great job of helping companies with policies and putting things into place. And now that we're having work from home, we were talking about things like taking employees' temperatures and what do we have to do for policy writing. And we're looking at, we're engaging them to help us with updating our policies also. So what I do is I'd like to get started. I'd like to jump right in. We have about a little less than an hour as we go through. I want to remind anybody that we do have a Q&A if you're listening, to jump in and ask questions on the Q&A functionality of the webinar, and we'll make sure to jump on and address those. So please ask questions. So first I want to jump in with John Ty of Mountain View Bank of Commerce. If you can take a moment and tell me a little bit about how many banks there are, and maybe just kind of jump in what you're seeing with everything that you've been doing working from home in the bank and helping people with these SBA loans.
Yeah, absolutely. Thanks, everybody. Good afternoon. Those that can see my screen, I got a visitor joining me.
Oh.
So I am at home. We've been at home now for 4 weeks, about a month or so. I work with Mountain View Bank of Commerce. We're a small community bank in Westminster, Colorado. Just the one branch bank that, was created and opened about 12 years ago by a former lender who saw that, there was a market for some of smaller businesses that were not being not given the time by the bigger banks. And so we focus on community banking and lending. And most recently, the last 3 weeks or so, we're deep in the PPP loans and the SBA, assisting some of the small businesses in the community.
Thank you, John. And that's a really good introduction. We're going to jump more into especially PPP loans, since I just saw the news come through that has gotten refunded, so we'll look forward to, I'm sure you're going to get a wave of those more. I'm going to jump down to Kelly Murphy and give a quick introduction. And I'd like you to kind of start, maybe we can have you jump into a little bit. We've been discussing unemployment, furloughs, things like that. So do you mind giving a quick overview of that? And I think I'll pull up a slide as you introduce yourself, and maybe talk a little bit about what you're seeing and how you're helping people.
Absolutely. Thank you for this opportunity, and good afternoon, everybody. My name is Kelly Murphy, and I have been in the HR world for almost 30 years. I'm not that old, right? But 30 years has given me a lot of experience and different practical knowledge in the HR field. Some people think that's a little crazy, but I love HR. So we are going to jump onto this slide. We're going to kind of talk about different questions that we have been asked from our clients and from our friends and our partners. The first one is, what is the difference between a salaried employee and an exempt employee? So salaried employees may get paid the exact same every week, but they are still eligible for overtime if they work over 40 hours in a week or 12 hours in a day. So they are considered a salaried employee. An exempt employee has certain criteria they have to meet before they can be considered an exempt employee. They have to meet a wage test. That wage test, starting January 1 of 2020, jumped to $684 a week. So they have to make at least $684 a week per week in order to be eligible for being an exempt employee. In addition to that wage scale, they also have to meet certain duties tests. They have to supervise 50% of the time, and they have to have at least 2 employees under there, or they're an outside salesperson, or they're a computer person in certain fields. So there are different tests. So that's one of the first things that we get asked is the salary versus exempt. The next is actually the difference between a furlough and a layoff, because furlough employees mean that you can actually reduce their hours and they are still employed by you. And in that furlough, you can actually zero out their hours where they are completely off, but they are still employed by you and they're still considered as a furlough. They're still available for benefits. They can be recalled for work at any time. They need to be available for that work. A layoff actually reduces them from your staff, and you have to pay out their PTO, their benefits will change, they'll be COBRA eligible in some cases if you have enough employees. So it's not a temporary situation. Both of those categories are eligible for unemployment. Whether it's COVID related or not, both of those categories can file for unemployment. Now, if it's for unemployment for the COVID, then we jump into the CARES Act. Through the CARES Act, they did come up with the Pandemic Unemployment Assistance Program that will help those COVID-related unemployment cases get extra help. So if the individual files for unemployment, it's because of a COVID situation. They are either at home because they have COVID, they're caring for someone who has COVID, they've been furloughed because of COVID, or they've been laid off because of COVID, then they are going to be eligible, more than likely. You never say what the state is going to do, but more than likely they're going to be eligible for that unemployment experience. When they are eligible and awarded those benefits, the federal government is actually going to add $600 per week for that individual. And it doesn't matter if that person is a partially laid off person or if they're completely laid off, they are going to get the $600 per week. It also extends unemployment from 26 weeks to 39 weeks. And that 39-week extension can go through December 31st. Now, the extra $600 a week only goes through July 31st and up to 4 months. So it's not through December 31st or anything like that. So the other thing that we want to talk about, there are some new categories due to the COVID-19 that can actually apply for unemployment. In the past and with regular situations, self-employed individuals, independent contractors, individual employees who haven't had a long enough work history. Those are the different type of categories. They haven't been able to apply for unemployment benefits. But now under this COVID-19 category, they actually can. And that actually started yesterday for the state of Colorado. I actually know someone who went through that process, and it was really easy. They don't ask a lot of information, a long drawn out process. It really is a streamlined process for that. So make sure that if you haven't been eligible in the past for unemployment, check and see if you are now under the CARES Act, because they did expand that category. Another thing that has changed with the unemployment world is normally when you apply for unemployment, the very first week doesn't have any benefit. It's called a waiting period. Well, many states, including the state of Colorado, has waived that 1 week. So it will retro back to the day that you were laid off or your hours were reduced or whatever category you fall in. So those are some changes that we've seen in unemployment. So that's kind of how it affects individuals. How does it affect companies? In the past, for regular claims, if you pay a premium in, which is called a contributory company, then your premiums actually increase as your claims come through, because the more the state pays, the more you pay in premiums. Well, with anything dealing with COVID claims, those will not affect the premiums for the businesses. But some of our businesses, because we represent our companies for their unemployment claims, we help them process the claims, the paperwork, and all of that. What we've seen is some of our clients have decided that they don't need to respond to any of the claims because it's COVID-19. We need to remind our clients and our business professionals that we need to be answering those questions from the state, because if it's not COVID-19 related, it is going to affect your premiums, and you need to respond with your information to make sure that your information is in there so the adjudicators can determine whose fault it is. So just wanted to remind people of that. That's kind of in a nutshell, Greg.
Yeah, so Kelly,
furloughs.
that Murphy, that's a great, thank you for all that. A couple things, there's a question that came in, and I'll ask that here in a moment. The other one is, one of the things I heard is that for businesses, even though it's not, we won't affect your COVID, or say we don't have any people who are going on furlough or unemployment, but we might run through the unemployment money in the state, and then our rates could still go up, right? Through all this, I mean, that's what I've been reading, that we can expect way it's going, that even though our unemployment insurance, it probably will go up just because of what's going on.
Right. Well, unfortunately, we can only go with the information that we have today. The laws and the regulations are changing. They were changing daily. Now it's maybe twice a week. So as it stands right now, they are looking at refunding that, or refunding, not refunding it, but putting more funds into that case. So hopefully the states will not run out of that. But the states are running out of unemployment benefits. So hopefully with the new PPP loans and things like that, the legislation will take a look and refund those unemployment funds as well.
One last question, then we'll move to Kelly Johnston. So someone asked, for unemployment, is the $16,000 cap changing, or would that be the same? Which I'm not familiar with what that is. So
the $16,000 cap, I'm not sure exactly.
Is there a cap at all that's changing, or
in
was
reference
there
to
unemployment cap?
So they may be talking about the individual cap, where an employee has to make X amount of dollars to qualify for that expense. For instance, a base period is a 3-month period. It's a quarter. You have to make $2,500 to be eligible, but that would fall under that new pandemic unemployment piece. The other cap is that when you are eligible for benefits and you are awarded those benefits, there is a cap of $618. That's the most that you can earn. That may be what they're talking about as well.
We'll see if they come back with more clarification.
Okay.
Thank you, Kelly Murphy.
Sounds good.
So, Kelly Johnston, what words of wisdom do you want to start with today when we're going through? We were talking about tax law. We're talking about getting, what should people think about when filling out their PPP, their financials and things like that. But I'm gonna let you take it away versus have questions, and just give us some words of wisdom on what are you seeing out there? It's a new world right now.
Oh, that's an understatement in our accounting world. Everything's shifted quite drastically. For those of you that don't know, the CARES Act passed 4 loans, 3 grants, and 5 tax provisions, in addition to a whole bunch of other regulatory guidance around healthcare and our transportation industries. The CARES Act was originally only supposed to be a couple hundred pages, and it ended up being 1,404 by the time it was said and done. And we're looking at a phase 4 actually going through the process now that we've been talking about. The first question, though, that I want to answer that we keep hearing, I mean, my phone has been ringing nonstop over the last couple of weeks, is the stimulus, and that's the $1,200 per taxpayer plus $500 per child. A lot of people are calling and saying, hey, I haven't received my stimulus check yet. Can you check my status? I don't have some cool portal to the IRS. I wish I did. That would make my job really easy, but I don't. So you as the taxpayer, there is an option on the website, irs.gov/coronavirus, and there's a couple different tools on there to check the status of your stimulus check. However, if you had a balance due return in a prior year, as well as if you had any sort of funky thing on your return, or if the IRS just randomly selected you, your status will be unavailable. And there's no rhyme, reason, or what around that, just so you know. I think what's happening is there's such a huge volume of items that are hitting the IRS that they're just working through them in chunks. I don't know the rhyme or reason behind how they're chunking out the distributions of the checks. So please give your accountants a little bit of grace in regards to stimulus check status, but you did not have to file a 2019 return in order to receive the stimulus check. And there are some qualifications for income thresholds around that. So single, you have to be under $75,000 to qualify. Head of household, $112,500. Married filing joint, $150K. So if you exceeded that in 2018 and you have yet to file your 2019, and 2019 is a different picture, I'd highly encourage you to file your 2019 return. It's definitely a tax strategy around those stimulus checks. So that's one of the questions we're getting often right now. The other is the different loan programs available. There's the PPP, the SBA 7A, the SBA Express, and the EIDL loans. The EIDL loan has an opportunity for a grant component. Originally, when the regulation came out, it was supposed to be a $10,000 grant. The SBI has come out with additional guidance because they were given the liberty to do so in the CARES Act, and that's now kind of paired with the PPP around $1,000 per employee. So the difference is it's going to be based around your 1099 income if you're a self-employed individual versus if you do have employees. So that grant process has changed a little bit. EIDL funding and PPP funding ran out early last week. However, we're hearing that there's another round of PPP that's coming out. And so just wanting you, if you're going through that application process for PPP, that is a paycheck protection program, which is 2.5 times your average monthly payroll. And please work with your lender. So John, this is a pitch to you. Please work with your lenders because every lender has slightly different requirements for this application. And it's purely because the lender is the one that's actually on the hook in terms of the loan, because it is a loan unless you meet the eligibility requirements for forgiveness. And so I'm encouraging my different clients that have received the funding, keep a separate bank account. Please make sure you're tracking the expenses specifically to the PPP eligibility. This means having specific chart of accounts like expense line items or those types of things that identify what's allowable and not. So that way you don't get yourself in a pickle when, say, you hit 74% of payroll costs instead of the 75 requirement in order to have it be forgiven. Also, make sure you're meeting the requirements of bringing back those employees to get to full FTE status, as well as the full amount of salary expense. It doesn't have to look a certain way in terms of how you get there, but you do need to make sure you meet the measurement requirements. And lenders have been phenomenal about when they give the loan, they give a document that says these are what you need to have. And so make sure your accounting records match as well. And then the last couple things I really quickly wanted to mention in respect of time and wanting to make sure every panelist gets to speak is the different tax provisions that were brought out with the CARES Act. So first of all, the one that's most commonly known is the April 15th tax deadline did get shifted to July 15th. However, our nonprofits that have a May 15th deadline, that did not get changed. So be very, very clear that if you're an April 15th, that is the only one that got changed, not our May 15th tax deadline filers. Estimated tax payments, the April, the June, and the September were all shifted, meaning you won't have a penalty for not paying four equal installments of your estimated tax payments as an individual taxpayer. However, as a fellow tax strategist and wealth strategist, it's not really easy to come up with a whole bunch of cash at year end, and hence the reason we recommend estimated tax payments. So I still have clients that filed estimated tax payments in April and respectively in June, so that way cash flow wise it's in alignment with where you're going. And then of course, in terms of actual regulation, qualified improvement property, net operating losses, and business income limitations have all changed. Those are like a whole 2-hour-long lesson in its own entirety. So please make sure you reach out to your tax advisor to see how those impact your businesses, because some businesses can carry back a loss in 2019 back to 2018, getting a better refund for 2018's return, resulting in more cash flow for the immediate situation. And they've also made changes to charitable contributions, so that way you can get more of a tax deduction for donating more to charities, because right now our charities are having to cancel multiple events, which is their big fundraisers for the year, and they're really, really worried about keeping these charitable organizations afloat. And so as a fellow taxpayer, I'm constantly brainstorming about how can we keep these nonprofits going and functioning during this time when everybody's really watching expenses, and those are the types of expenses that are going to get cut from a lot of budgets. So that's a lot in a very short period of time, and there's a heck of a lot more I can go into, but we'll stop there for now.
Kelly Johnston, great information. I am going to loop back to Kelly Murphy in a little bit, so stand by. And again, if anybody wants to jump in, but I do want to jump to John, Ty, please, so we can kind of talk a little bit about what you're seeing and what would you like people to think about when they're working with community banks. We've had other webinars on this same subject, and when we talk to bankers, I mean, a word come up is have some patience. Again, you don't have the quick line into it. It takes time to work through these. So I thought maybe, John, you can give some words of wisdom, or you know, the rest of the panelists kind of have this discussion too. But I mean, you process a lot of loans. It takes some time. People are coming at you with a lot of different type of paperwork. So I'll let you take it from there, because I know every banker I know is working very hard to try to get this done for their customer.
Yeah, absolutely. So speaking from our community-sized bank, we have all the decision makers in-house, so it's very, very fluid. My opportunity is I get to tell the story of our clients, our borrowers. So when you're working with your lenders, take that opportunity to not just answer questions, but have a conversation. If you can grab a few minutes of your lender's time and get to know them, and then have them get to know you and your business. Because ultimately, for me as a lender, I'm going into our boardroom and I'm representing you. I'm telling your story for us, because we've had so many applications. We develop a questionnaire. It's a quick 5-question piece where you're able to kind of answer and kind of tell your story. So that's one bit. The be patient part is certainly helpful, but then I would encourage some of would-be borrowers to really pay attention to details. Once you get the attention of your lender, they're going to give you a list of things that they need, and they're going to give you some directions. And then if you don't understand, ask questions. They're the experts. They'll be more than happy to kind of walk you through it, but pay attention to details, because you get your one turn in line, and then if something happens and you get to processing your application and you miss something, it could take a day or two, and then ultimately back of the line. I threw that joke out. I wouldn't do that to any client, but I say, well, back of the line now because you forgot so and so. It's pretty serious, but ultimately, from our community bank standpoint, we're representing our small businesses. So really get to know our borrowers and get to know your lenders too.
Yeah, John, I really appreciate that. And one thing I want to bring Kelly Johnston and talking with these two things. Kelly, you always mentioned to me, like, what should we have? You should have a relationship with a banker, a lawyer. You tell me these.
Banker, lawyer.
You cut out. Did you hear her? No, I think you cut out, Kelly. Hold on, Kelly. Kelly, you're. No. So we can't hear you, but I'll say banker, lawyer. There, you can come back on.
Financial advisor.
Go on.
Accountant, bookkeeper, an insurance provider, an HR specialist.
Yeah.
Your
So-
accountant and bookkeeper should be two separate people, or if it's a firm that offers both those services, eventually they should be divided because bookkeeper's in the weeds, accountant's a bigger picture.
Yeah, so I think those are great resources to think about as any size of business as you kind of grow through this, because you're all going to need them. I'll tell you that from just, especially now we're going in this kind of new economy or adapting to a new economy. You cannot do this alone. I'll tell you that right now from me having a business for a long time. When it's easy, you don't really need your accountant as much, right? You can just, go through it. Or maybe you don't need an HR person because all your employees are happy. And then all of a sudden you're like, crap, we're not happy anymore for some reason. And a banker, I was like, more important, what helped us is really having strong relationship with our bankers, even through good times. And then when the bad times come, that's where you want to reach out to John and be like, hey buddy, how you doing? Hopefully it's not the first time you guys have talked or had an email or a beer or lunch or something. Because I think, and I always tell people, like, take your banker out, take your accountant, just do something. Get to know what's happening out there, because they're really going to have your business in the best interest. So I'm going to move to Kelly Murphy. We had a question come in, and you can clarify the 16K item. So we have a question. This comes up a lot as a single owner entity, and I think maybe all of you could help answer this too. So if I was a single owner entity, right, I'm my only employee. So is unemployment available, ethical, legal, if I'm still earning a small amount through existing retainers, but potential business earnings have definitely taken a huge hit and growth has stopped? So, we're seeing this, like, what is available to me as a single owner entity, a consultant, the gig economy, those kind of things that we're seeing, but, have an LLC in that. So what advice do we have?
Effective yesterday, in the state of Colorado, you definitely can file for unemployment if you are a self-employed owner. Is it ethical? I think it is, because during this COVID-19, it is affecting your business as well. It's reducing your opportunity for leads. It's reducing the opportunity to go out and find new customers. And even your existing customers, it may be reducing what they're able to do with you. So absolutely, if you are full and you haven't been reduced, then that's a question that you will have to talk to yourself about and answer that. But with the reduction of people pulling out on jobs that they have bid on, things like that, absolutely. I think that it is ethical and it is legal and it is available to you right now through the state of Colorado, at least. And they made that website live yesterday.
Kelly Johnston, do you have anything to add to that? Or from when we're talking about unemployment, anything that you're seeing or things to consider about tax ramifications? Because a lot of people on unemployment right now. So I wonder what advice you might have with that too.
Thank you for seeing me leaning forward and wanting to talk. The unemployment aspect, one thing I would always caution people about, unemployment and some of these grant opportunities can become taxable income if you're not careful. So you get to make sure you're having appropriate withholdings withheld. My challenge question back to you is, what can you be doing now as a business owner using your current expenses to find new ways to generate income? Because we're going to go into a pretty large economic contraction over the next 24 months. And so my challenge to all my business owners has been, okay, yes, it doesn't look the same way. Business has dropped off, and I completely understand that in short term, you might want to look at that unemployment as an option. But I also challenge you, right now is a really great time to look at your business model and see where you're going to go with it. I just had a pottery studio who used to serve food and wine while people did pottery, just open a food delivery service because they already had the food handlers cards and they wanted to keep their employees employed and moving forward. So to me, the creativity is the opportunity right now, and especially in the field of marketing and the marketing agency aspect, it's going to be a cost that people are going to want to cut, but you get to show the ROI on that and how you can help people increase market share in a time when you need to grab market share, because if you're not first, you're going to be pretty behind the curve. So that's my challenge to that question.
I agree with what Kelly's saying. This is the opportunity to find new lines of service. Branch out and don't have just one line, so that when we do have these type of things happen, look at your emergency preparedness. How are you going to pay your employees? How are you going to cover your finances? What other lines of services can you incorporate into your business and get creative in it? So thank you, Kelly, for adding that.
Yeah, and I'm going to say, like, when I'm seeing, I'm running up John here and with a question on the PPP, John. So get ready. I agree. There's a lot of companies that have stuck their head in the sand, and I think we're just not where we're scared, or they don't know what to do. They're maybe they had all hospitals and they all went away. Right, now's really the time to reinvent yourself and really start to reach out and help people. I think we're getting requests. I mean, every day, new business requests, because we're available and our team is kind of on that hustle and grind mode right now, much like I felt when I started this company, over 10 years ago. It was that kind of hustle and grind kind of mentality. And now I think if you have that same mindset, that entrepreneur or that startup, that you're gonna survive, and all of a sudden you're gonna realize you're gonna find new business opportunities. So I want to switch to John and Kelly. We're all talking about this, about the PPP. Now that what happens, John, when someone gets these loans or any of these SBA loans? How do they have, what record keeping is a bank needing from them? And I know Kelly Johnston might be able to add to this too. Like, what should we do? Now I have an account. I have X number of thousands of dollars sitting in this account with you. I know I just can't go and take it out and buy a boat. You got to monitor it. I have to use it for the right thing. Now that we get it, it's a lot of stress, one, to get the money. Now that you get it, you feel a little less stressful, but now you're stressed that you have it because now you have to do the right things. So I'd like to have a little conversation about that. Like, how do you keep us out of trouble?
Yep. So Greg, you took my line. I use that line probably, half dozen times a day. Now that you have the money, don't pull up to the bank with a new boat and then ask for forgiveness, right? Or a new car. It's for us. So the government and the SBA has given the lenders the power to underwrite these loans, and so specifically with our bank, we have decided that we're going to help all of our borrowers in making sure the use of their funds is forgiven. At the end of the day, we don't want our borrowers to have a loan, in 8 weeks. And frankly, the bank doesn't want to have to monitor, a loan 8 weeks from now with the government watching over us. So the first point, the highest priority for me is to, with the grant or the award that you're received, it might not be, it won't be enough, obviously. So I would take the obvious forgivable expenses and put the money towards that first. So certainly all your payroll expenses, if you're paying employees, and then if you have rent to pay, those are a couple of big expenses that are for sure forgiven. If there's anything questionable, like utilities is a part of the forgiveness piece, but there's some gray areas between what is considered utilities and what isn't. Those are one-offs, couple $100 here and there. I would save all of those until we have used up all the other funds towards the obvious forgivable pieces. As far as the documentation, our bank is monitoring it draw by draw. So we didn't back the truck up and give you all the money at once and hope we see you in 8 weeks. We're hand in hand with this, and we're going to partner with our borrowers. So You know, we request that they keep some documentation and payroll reports. You know, rent payments, leases, that kind of stuff is pretty easy to keep. And then I told them that we would be monitoring kind of a spot check here and there, but it would be up to them to keep those records.
Kelly Johnston, how are you going to ask people? So I come to you with this, I'm going to make up a number, $40,000, and you're my accountant or bookkeeper. You know, what words of advice do you have? Again, I have a relationship with the bank, you know that, and then now we have you, and you're like, what should we think about?
Well, I actually just did this coaching session with a client like right before this call because they got fully funded. So unlike some banks that are funding it one draw at a time, this particular scenario that was fully funded in an account. So I'm a big proponent of separate bank accounts anyway for certain functions. I'm a profit first believer and a Dave Ramsey envelope system fan, and you can make envelopes out of bank accounts the same way. And so knowing that, I've actually talked to a lot of my PPP clients and saying, use it as your payroll account first and leverage those payroll funds. Make sure you should have a budget or a cash flow plan anyway for the next 8 weeks to a couple months. And if you don't, definitely use the prior data to jump into that process so that way you can make sure you meet that 75% threshold. Because note that federal taxes and certain types of earnings in the payroll don't get calculated as part of that 75%. So I'm challenging people to leverage those items first and use it for that. And then you can cover rent, utilities, and mortgage interest respectively with the rest of the funds. However, as John mentioned, there's a lot of specifics around those items. And so again, I'm telling my clients, cover payroll first, then leverage what's left based off of the measurement period. And a lot of it is timing as well. So whenever you get funded versus compared to the 8 weeks, and then also comparing that measurement period to what you had prior to funding or whatever measurement period the bank used to give you your loans, you need to make sure you're keeping the same FTE count and salary and wages or get up to a certain salary and wage amount by a certain date to meet that. And so we're doing that through payroll tax filings and payroll reports. So 941s and having that all in play. For those that are self-employed, this includes your 1099 income. It's box 31 on the Schedule C. And so that means income minus expenses. And you're tracking that month by month, just like you would track payroll. And so really making sure you're meeting whatever the lender's requirements are for the forgiveness. Because like I said, every bank is slightly different.
That's good information. So, I mean, there's a lot. I would advise if you have this type of loan to have us open up a separate bank account for it as well. If you have a payroll system connected to that. So I would just take payroll out of that if you can handle that from a funding standpoint and just use it for that and stretch it out as much as you can, I think is probably my advice from running a business. And that way you'll have clean records and things like that. Will make it so much easier for the loan forgiveness. Are we positive the loans are going to get forgiven, or is there going to be new rulings coming out? I've heard a lot of questions. People are asking me, I'm not an expert. They're like, I'm really nervous about taking on this debt. And I don't know how to answer it because I think they feel like things are changing. So, I mean, you kind of mentioned this, everybody. I don't know if we can have John or the Kellys, anybody heard anything?
Yeah, our bank, we're fairly certain that it will be forgiven and not much will be changing. We're taking the angle that if things are changing, you've already signed the note that governs the loan/grant that you're getting. So there's a little bit of fine print in that note, but it's all SBA jargon, and we come straight from the Treasury Department on how they're going to forgive it. So we copied and pasted and put it into our note. So that's, your loan is governed on that, even if things do change in the next couple of weeks.
Yeah, and to piggyback on that, every loan that I've seen dispersed thus far has an amortization schedule attached to it, and as well as the fine print with that amortization schedule. My biggest fear from an accounting perspective is seeing a whole bunch of small businesses leave this pandemic with a bunch of debt that they can't repay. And so what I'm telling my clients is, yeah, there's the forgiveness aspect and making sure you're meeting the eligibility requirements, but at the bottom line, you're still required, it's a loan until you meet those eligibility requirements. And most of them are doing like small $100 payments starting in October, and then there's this huge balloon payment at the end of the 2-year term period. And so I'm challenging, again, business owners to think that, make sure you're meeting those eligibilities, and if not, no, you're going to owe the money back. Because I hear that as well, like, what happens if I don't bring all my employees back? Well, you're not going to meet some of the eligibility requirements, and there's a measurement period for that. And so you get to know that it's a loan at that point. Granted, it's a very low interest rate loan, but it's a loan nonetheless. And the same goes for any of the other SBA or EIDL loans or grants. All of those are loans. And so again, my whole philosophy from day one, and Greg knows this because he was on one of the first panels I spoke on a couple of weeks ago, is you need to make sure you're selecting programs that are part of your 5-year plan and not just part of this, like, get me through this moment kind of thought process. Don't get me wrong, those are great too, but it's still debt one way or another. And you get to work with your lender to make sure that it's the right move for you.
Yeah, I go on the line, like, even though it's not, I always feel like nothing's free. So to be planning to budget, to have to pay that on your books. And then if everything goes out the way it does, but it could happen that it's not forgiven right away, just because I can't imagine how they're going to process these millions of loans out there, right, that they're trying to cover. That's the thing. It's going to be an odd. So work closely with your banker. Had a question come in, John, and maybe the Kellys can answer, but what if you were to add employees right now with the PPP money? Is that forgiven? We went back because it was calculated over the last 12 months and they had that average. So now if you're growing, all of a sudden you're like, man, I need to add people. I mean, I guess it's like your average of the people you have. If I have 10 now, I have to end up with 10. But if I had 12, well, I'm paying them. So I don't know. I mean, I think we're answering the question, but if you guys have any feedback on that. The extra is not forgiven, right?
Well, the SBA is a strong, they have a strong component of generating new jobs. And a lot of their loan products ask specifically, how many jobs are you keeping? How many jobs are you going to create or planning to create? So my understanding on this loan is we've taken the average of the last 12 months, put a multiple on it. So you have that money to grow your business, or, in some cases, kind of just keep the doors open. But if you're lucky enough to prosper and grow and, bring on more employees, the problem is that you'll just run out of that money. You'll be able to pay them sooner than the 8 weeks. So that's actually encouraged.
And Greg, if I can.
Yeah, Kelly Murphy, go ahead. Yeah.
If I can add to that, those employees that you have furloughed and you have laid off, even if you don't have work for them to do right now, you bring them back on your payroll. You can pay them to look at policies and procedures. You can pay them for sitting on their couch. As long as they're back on your payroll, that's going to cover that PPP requirement as well. So if you have furloughed people, if you've laid them off, rehire them, make sure that you're meeting those thresholds.
And it doesn't have to be the same employees either. So if you did have a transition in employment, but you all had 5 FTEs counted, as long as you have 5 FTEs in total salary match, that's what matters in the long-term game. It's kind of like the Affordable Care Act and how it used to measure measurement periods for MEC and MEV coverage for 50 or more employees. It's the same exact measurement. You're just comparing prior periods to the current. It doesn't matter the actual individual though.
Right, but if you aren't going to bring employees back, you need to make sure that you're meeting certain criteria for that, so that you're not setting your company up for discrimination. Even if it's just perception, you need to make sure that you have solid criteria on why you are not bringing someone back.
Yeah, that's good. We had another question come in, and we kind of talked about this, but is there a benefit to managing your PPP draw? Take it draw by draw or paid in full? And I think that's working with your bank. Most banks I know, and you can talk to that team, is that they're kind of managing it with you, like requesting how much you need, and then they'll transfer it into your payroll account versus you going and saying, okay, I'm ready to take my $40,000. And then I think you're doing it draw by draw, but I think that's bank by bank, John, or is there a ruling on that, or just kind of?
No ruling at all. That is bank by bank. For us, again, we're partnering with the small businesses. And candidly, we don't want to manage that loan at the end. So if the borrower or client takes on the full lump sum of $40,000, then ultimately they're taking on that risk themselves, and the bankers kind of have stepped back. I would imagine some of the bigger regional banks may not have the close-knit relationships, and so that's the route that they're taking.
Yeah.
If you share the draw process, it's no more than 4 or 5 transactions in the next 8 weeks. Then you can have someone double check your work. If you're concerned about having to pay this loan back, if your banker is giving you the thumbs up, that's certainly a good sense of a good feeling that it's going to be paid back and you're doing things the right way.
Perfect. And I think we always get this question too when we do these is FTEs, full-time equivalents. What about part-time employees? How the heck do they fit in if I have 5 full-time and 4 part-time? How does that fit into this PPP equation for anybody that wants to answer that?
So I can take that one. So full-time equivalent is basically based on 40 hours a week. So how many employees does it take to meet that 40 hours? So if you have 2 employees who are part-time and it's 20 hours per week, they will equal 1 FTE because the 20 plus the 20 equals still 40. So when we talk about FTEs, it's how many employees will it take to meet that 40 hours?
Okay, thank you for that. That's great. I'd like to move in. We have a couple more minutes here, but I wanted, Kelly Murphy, policies. You're talking about things like where is it going, like small business. I've grown, I've been doing it 20 years. Can I Google human resource help? I mean, doctor, like I have Google a doctor help. I'm joking, but I think, why should we look for human resource as a small help for a small business, whether you have 2 employees or 20 or 50 or whatever? I mean, we can answer this, but I think we should all talk about this as a group and say, how does this benefit you? And I think it saves you money, blah, blah, blah. But what are you seeing out there? What tips do you have? Keep me out of trouble.
So that's kind of funny. I have twin daughters who are in med school, and when they hear Google Doc, they freak out. Yes, you can find anything you want on the internet. You can find the pros and the cons for any situation that you want. Where you get in trouble is, am I looking up the right information? Am I getting the right law for my state, for my locality? Do I have the expertise to keep myself out of trouble? So it is much like going to WebMD. Yes, you can find the information, the forms, the policies, but do they meet your particular situation? Nonprofit, small business versus large, and things like that. So in this situation, the policies that I would be looking at if I were a small business owner, looking at different policies that I need to have in. Look at your handbooks. When was the last time that it was put in place? Even without COVID-19, there are laws constantly. We have the new comps law in Colorado. We have the equal pay for equal work coming up. We have ban the box, if you will. All of these different things. In the last couple of years, we've had personnel file laws and regulations. Are those in your handbooks? Make sure that compliance is up in there. Kelly J's got a question.
No, I want to add one thing. This
Yes.
HR handbook does matter if you're a single man
Yes.
S corp. I'm just going to tell you that right now,
Yes,
because
it does.
IRS has come back with some serious guidance around meal policies, mileage reimbursement, like you were a normal employee, and that gets to be in your handbook as an accountable plan. We have a really cool little video we put together on our website as free info if anybody wants to piggyback on what Kelly's talking about, because I'm going to tell you, those employee handbooks matter even if it's just you.
It does. It really does. And this becomes the structure of your company. When you follow those particular structured processes and stuff, it keeps you out of discrimination because you're not treating people differently in different categories. I would be looking at, I've laid people off, I've furloughed. Do I have a policy where I can recall them? What does that look like? How do I return back to normalcy? Emergency preparedness plans, things like that. Can I take an employee's temperature? That is completely different than what we've been able to do in the past. ADA and EEOC says that's off limits. Well, now with COVID, it's not off limits. So what criteria do we need to put in that? Working remotely. Wow, have we exploded into that network? So do you have those processes in place? How do your employees engage with you? Do you have weekly reports that they have to fill out? So all of these different things that have come about because of this, they're good business practice to take a look at. We are actually putting together an email blast, if you will, on how do we return to whatever normal looks like. Looking things at like, what does the workplace look like? What does the work environment look like? And things like that. And definitely looking at those policies in that handbook is a part of that.
I agree. We're actually you're going to help us redo ours as we've grown and gone from like a couple pages to now. And it comes over time with questions. And as you have different policies and hiring and interns, and it's part-time and full-time. And it just, I agree with you. If you have a policy, you don't have to remember like, what did we do for so-and-so and what do we do now?
Right.
What do we pay people? Why do we do that? And I guess it is that protection. So I appreciate you bringing that up. I want to bring Nicole on with a couple more minutes we have. As a business owner, and you're working through all this too, like us other business owners are, everything we've been talking about, what are you doing or what do you see, or any words of advice for all of us?
Yeah, so I'm just a recent business owner. I closed on this, I'm buying a 20-year-old business on February 14th, right before the meltdown. So what I have done, we've always been a remote work team. We're very virtual, but what I've implemented is a lot of communication, bridging. We're used to working remote, and they like us to leave them alone because they know the work they have to do, but really kind of bringing more of a family together with regular Zoom calls. It was really funny when we implemented the very first Zoom call. Everybody was like, I saw my warehouse manager's ear a lot and things like that, but really kind of bringing us together as a family. And I think that has really, really helped our team migrate from an already remote to a more cohesive family. There were various reasons, but I had to ask them to take a small pay cut, but I'm allowing them to take a day off because we just don't have the work. But yeah, those are the kinds of things, is trying to really focus on the care and the nurturing of our organization as a whole entity, and kind of keeping us together so that we're not feeling solo and scared in our silos.
Yeah, those are really good, Nicole. Thank you. Because what we found from our employees too is they go home to their spouses or significant others or roommates or whatever we have, and they're each of them dealing with different things in their families, and that's a lot to manage too. And I don't know if it's hard to have a policy for caring, but also running a business, right? And so there's some hard decisions that have to be made. And I think by over communicating with them is probably we have ongoing meetings, trying to have 10-minute meetings with our employees to be like, how are you doing? Here's what our expectations are. Just working through things, and it has been that challenge. So Nicole, thank you for that. And congrats on being a business owner. I don't think there's a right or wrong time to get involved. And if you work through this, you'll be prepared as we'll go through. I want to start wrapping up. We're at the end of our hour, but I do want to go around everybody. And I'm going to start with Kelly Murphy. And I'm going to just really ask if you have any final tips. And if you have a website link or something for a video or something like that, let's give it out there. People can write it down, and we'll make sure that Nicole sends it out. But final tip on this, everything we've been talking about, and if you have a work from home tip, I'd like to hear it. Let's go around robin, and then we'll close up. So go ahead, Kelly Murphy.
So number one tip, set boundaries. When you are working at home, when you're working remotely, it is so easy to just start and never stop. When we go to work, we get in our car, we go to work, we start our day. At the end of the day, we get in our car and we come home. And sometimes working at home, it's hard to put those boundaries in place. So put boundaries in place. Have a start time and an end time, and give yourself grace when you're not making the best choice. It can be fixed. It really can be fixed. Maybe hard, but fixed. So work schedules, even though you're at home, and give yourself grace. And our website is lighthousehrs.net. And we have a blog up there. We do an update at least once a week as legislation comes out. And again, this next update that we're going to have is, how do we return to work? What do we need to look at in our workplace? How do we bring our employees back? So thank you for the opportunity. I really appreciate it. I love working with this panel.
Thank
Have
you,
a fantastic day.
Yep. Hey, John, what do you think? Any last tip? Be nice to Baker.
Certainly.
What do you got?
Yeah, I'll try to make it quick. We talked a little bit about ethics. If you're fortunate enough to receive a grant and some of those funds, the purpose of that is to get employees back into the workplace and getting people paid. So I feel, a great sense of fulfillment to be able to help the small businesses. And I hope that, when the money gets out the door, that the business owners are doing the right things and getting employees back. One example is I have a small neighborhood bar. They're not open yet. They're not going to be open for another 2 weeks, but he got his first batch of money, and he's got his employees in the bar cleaning, and they're happy to clean. They're happy to get paid, full time to clean. Yeah. So just a little piece of ethics. And I'll shadow off Kelly. My thing was the grace. Work from home is brand new to me. I've always been in the field, so being at home and having my 3-year-old join my Zoom call is, kind of the norm now. So, I think it's okay, and I hope everyone else thinks that's okay too.
Adorable.
Kelly Johnston, final tip and work from home?
I just say the final tip would be, as a business owner, entrepreneur, employee, right now, mental health is more important than ever before. So take the time to refill your cup, because you can't fill others from an empty cup. That includes taking care of you. I know I get guilty on this. I'll work all the time if I don't set the boundaries that were set ahead of time. So again, take care of yourself. It's very, very important. And in the long run, really, again, this is our time to be creative as entrepreneurs. So I challenge you to look into your creativity box and start to figure out what really can serve you and your community as we go back to work. Follow us on Extreme Movement LLC. We have social channels through Facebook, Instagram. We do a really cool podcast every week that's free content about who should be a member of your team, or some cash flow in an economic crunch, those types of things. So follow us there education wise, and then JFS is our accounting firm. So looking forward to supporting you.
Thank you. And Nicole, last but not least, your work from home, what's happening over there? Are you gonna, you learning to play guitar or anything like that?
Well, I'm learning to shut my door. We have 4 people working and doing school in the house. Just sort of creating spaces where we can focus. So that's kind of my work from home tip. I loved this panel discussion. We got a wonderful question right at the end about new business development strategies. And I think that is a brilliant shift topic for our next one of these. I don't know who will be on the panel, so whoever messaged that, if you want to email me at nklein, Klein, at exhibitexpressions.com. We'll be sending out all these links and things like that. I'd love to hear more about what types of things you're looking for so we can assemble another panel. So great question, and thank you. And thank you for staying tuned and allowing the Marketing Alliance to be your partner for engaging, you know, content that you need right now. So.
Yeah, thank you, everybody. I appreciate, again, being on this panel and helping guide the conversation. Thank you for all the help you're doing out there for all of your customers. I know every day is a new day. It is in my world. And again, keep smiling, and we'll do what we can. And then with that, I wish you all a wonderful day, and we'll get a link out to everybody on this webinar in the near future. Everybody have a great day.
Thank you.
Bye. Thank you.
Bye-bye.